recording. Cool. So let's just share my screen and we can get going. Oh, Ricky's here. Good, brilliant. Ricky.
I've got loads of stuff here.
Can you see the screen? Just the hands up, show hands, the thumbs up. Can you see? Yeah, Andy. Oh, great. Thank you. Brilliant. All right, let's just move this up there. Just move out the way a sec. Cool. Now then, brilliant. Thanks very much for coming along this evening. What we're going to be doing is going through some financial freedom through property, really. So investment strategies that. Oh, hi, Ricky.
Hi.
Hiya. Just about to get started now. Is that okay?
Yeah, that's fine. Yeah, thank you.
Brilliant. All right, super. Yeah. So I've been working with Dave Alvarez really for what's it work out 4 years, isn't it, Dave? Really, we've known each other. With AZ Autos in garage down in Gravely and in Hitchin, and I've kind of always known that his passion was cars, but he's kind of moved into property now, and he seems to have gone off onto the property front, and he's hooked up with a guy called Andy Camp, and they seem to be really doing some really good things on property and development, and it's part of it does tie into the Action Coach framework, if you like, really. So we're looking at clients that are moving up to the top part of our 6-step framework, which is looking at investments and generally moving on and getting some kind of investment from their hard-earned cash, really. So it seemed a natural progression when Dave said, oh, look, I've got this idea of let's do a joint webinar and see where we go. So this is the sort of entry point, really, to seeing how we get on with this sort of top end of our 6 steps, really. So I'm really excited about this evening and see how we go from there, really. So it's going to be a more of an interview kind of setup, really. So I'll ask some questions that I've kind of gleaned as I've been going along, really, and I'm sure David and Andy will be able to answer them. But please feel free to ask your own questions, interject at any time. I'm sure it's not a problem. We're not in the sort of situation. I don't run sort of webinars that, oh, I've got to talk and then you can ask questions at the end. You can feel free to ask questions at the end. But if there's anything, there's a burning point in your mind, please feel free to mention it. It's not a problem at all. We're quite happy to take your questions, really. It will be in a kind of interview format, so hopefully we'll get moving on that. Hope that's okay with you. Now, just to sort of set things up, one of the things that we've kind of brought out, really, from the coronavirus, really, we've almost got a sort of BC and an AC, before coronavirus and an after coronavirus. And change has kind of been a buzzword or a byword for things, or pivot. I mean, I'm not sure where pivot probably came from America, but certainly change has happened. But certainly, if you wind the clock back, change has always been happening. So it's really has always been happening. I've just finished reading a book called The Daily Stoics, and it's meditations from Greek and Roman philosophers going back to ancient times, and they talk about change all the time in their time. So you think nothing really changes. It's definitely going to change. So do you have a growth mindset that's willing to accept that change and develop? So that's the kind of thing that I'm always looking for with my new clients, really, is having that growth mindset, not wanting to be stuck in their ways and wanting to be as good as they can be. So how good can you be? It's not about anyone else. Everyone's on their own journey to find out how good can you be. So hopefully that makes sense. This is a runway, and it's a runway at a ski resort. Actually, it's a ski resort at Telluride in America. So if we're we're all of us guys, we're all on this plane, and our pilot is starting on the journey down to the end of that runway. Do we want him to participate 100%? Probably yes, because if not, we're going to be crashing into those mountains. Any idea that what speed a plane needs to get to take off? You can either shout if you want to shout out. Anyone got any ideas what speed a plane needs to take to get to before it takes off?
150 miles an hour.
Oh, good. Yeah, 150. Close. So it's a little. This is a clue.
170.
Oh, higher again. So,
200. 200.
Oh no, lower. Wow, it's 180. 100. Apparently, it's 180 miles an hour. That gets you up in the air. I'm not quite sure where I got that from, depending on the size of the plane. I'm sure it might change, but 180. So we do need to get that pilot participating 100%. So there's only one failure tonight, and that's a failure not to participate. And I can see most of you are there on screen, so I can see whether you're looking out of the window. I can see the screen and you, so I can see what you're up to, making a cup of tea or whatever. So all I'm asking for really for this next 55 or 50 minutes really is your full attention, full participation for 100%. And if you participate 100%, you'll get 100% back. If you choose to sort of go on silent and watch Coronation Street or whatever is on TV at the moment, then that's entirely up to you, but you won't really gain much from the webinar. So have I got your full participation? So those of you who know me, it will be a show of hands. Thank you, Andy. Brilliant. Will, thank you very much. Brilliant. So thanks for that. So this is a what on screen? What is it? You can shout out. This is probably easier. Say what you see. It's a
Black line.
No, hold it.
No?
a line. Yeah, a line. So it's a line. Now this is a really important line. It's our line of choice, and this is one of our key mindset fundamentals really within Action Coach, and it's a line of choice really, and you can choose whether you want to be below that line in your thinking and behavior, and in which case you'll be looking to make excuses. It's Brexit, it's COVID, it's too hot, it's too cold, it's too wet, it's too dry, I'm too tall, I'm too small, I'm too fat, I'm too thin. Whatever excuse you want to come up with, at least it's just for you. Certainly the next one there is blame, and blame's probably worse actually, because when you start blaming other people, you start losing the trust of your teammates and colleagues. So the sort of blame culture exists. So that's not good, not a good culture at all. And then probably the worst one is denial. And you've probably got people that are working in teams, or you've met people that are always looking at blaming others and making excuses. They think when you ask them, they're actually doing a brilliant job. So I'm sure you've all come across those kind of people. So we don't want to be below the line. We want to be above the line. So as humans, we are responsible for our own actions. We're accountable, and we want to take ownership. So we're looking for people that are not coming up with reasons why they've not done something. We want people that are looking at results and reasons why they have done something that will give you the results. And interestingly, you've got those sort of more energetic, go-getting people that I'm sure are all on the call. Reverse would be the energy sappers and energy drainers, and everyone knows who they are, and they really do want to be avoided if possible. So hopefully that gets you a good little idea of the mindset. And it's all about really, I think I've been talking about right throughout COVID, and even before when we first started, was what can you do as opposed to what you can't do. Because people have come up with an idea of a million excuses as to why they can't do something, but we obviously want to know, what can you do? Well, what is it you can do? So that's hopefully that makes sense, and let's think about what we can do, and we'll move into the bulk of the presentation really. So why we should be listening to, I mean, our Camp and Co developments really at the moment, they've got or involved in around £18 million worth of property. So I think that's a pretty impressive figure to start with. Dave, as I say, he's from AZ Autos, with car garage and maintenance garage, a successful independent garage in Hitchin. And then Andy, I'm told, has left the London School of Economics, joined Morgan Stanley, and had enough of that place really, and thought, right, I'm going to follow my passion and the passion of property. So Andy's been doing that ever since. So that they're the guys that are kind of, I'm going to be asking the questions, and feel free to interject as you see fit, really. So let's get started then. So first of all, it's strategies. So how to set out a strategy that's right for you. And we're going to run through a couple of strategies for areas that you could look at within property development, really, as a sort of mass idea. So starting with the first one there we've got is buy to sell or flips. So creating lumps. So I mean, I'm already confused. Flips, I'm not sure what that means. So David or Andy, can you please tell us what? I understand buy to sell, but why is it called flips? What's going on there? And I'll share this for you.
Brilliant. So buy to sell, flips, kind of the same thing. Is kind of one of the big few fundamental strategies that people work through. So this is your classic. You're buying something, you're adding value in some way, and your end game is an exit of selling, just to create that lump sum of that margin that you've created, to create that as a lump sum of cash, add to your cash pot, and you'll see later on how this feeds quite nicely into some of the other strategies. So we've done quite a number of buy to sells, trying to build up our own cash pot together, multiple different ways. There's lots of ways you can do that. The classic is just buying something that needs some refurbishment. You do the works, you add a bit of value, you then sell it through an estate agent, and that margin you create is your profit. That's a classic flip. We can look at some more complex versions, things like getting what they call a planning uplift. So that might be as simple as buying a plot of land, getting planning permission for a couple of dwellings or whatever that might be, and selling that on then with the planning permission with an increased value. So they're slightly more complex versions, everything from building out to just planning gains or sorting out legal issues like leases and things like that. They're the kind of more complex versions. Does that all kind of make sense?
Yeah, does to me. So is that the sort of Homes Under the Hammer kind of TV shows that you kind of see where they're buying somewhere, and then what's his name, the ex-footballer Dion Dublin is going around saying, oh yeah, we're going to do this and do that, and don't paint the bathroom pink because no one else likes it, make sure it's white.
Typically they'll be doing flips. They also do kind of what's called buy to lets, which we'll come on to in a bit, but I think it's the quickest way to kind of get a chunk of cash. So you're just kind of you're trying to create a nice pot of cash, and it's the fastest way to get the money back in your pocket and then kind of go again with it. And typically what people tend to do is they start off with a smaller property, refurb it, get a small, a nice little gain on that, and have a smaller pot, and they'll put that into the next one, which is a bigger project, then get a bigger pot, and it kind of grows and grows and grows and grows until they're doing kind of, houses and things like, buying land and building, 3 or 4 houses. And it just can quickly scale up. And it's brilliant in an up market. So like we're seeing in the moment where stuff is going hugely up in value, if basically flips are perfect in this environment, because not only are you gaining money from capital appreciation, but you're also adding that value as well by refurbishing it or putting an extension on it or splitting the plot. So yeah, it's the perfect environment for it at the moment.
The kind of flip side of that is there is a risk in down markets by the same token. So I think this is something that some people get a bit more wary of at the minute, and particularly were just before COVID, kind of when we had the election and we had Brexit looming. People were wondering, well, if I'm going into a flip, am I doing that into a down market? So you might be buying something at 100 grand, hoping to sell it for 200, but you're not sure about that 200 because you're a bit worried about the market. So there is a bit of risk in it. But obviously, I mean, we'll show you some examples in a minute. There can be some big chunks of money to be made in these as well.
Okay, brilliant. So I think, let's move on to the example then. So you've got, these are some of the, I believe these are some of the projects that you've been, is this the same, the before and afters then? These
Exactly, yeah, that's it. So the top is the before, bottom is the after.
Oh, good.
You can't get avocado bathrooms like that anymore, I don't think.
No, look at that. That's not nice, is it? That?
Yeah, no. So this was a project. We did this in Letchworth. So we bought this in 2018, and I think it concluded. 2019, and it concluded in right kind of when COVID hit. Funnily enough, so it was an interesting case study for that alone. But this was a flip. We bought this on the market. I'll go through the numbers in a minute.
Yeah, to show you the figures.
Yeah, do that.
Yeah.
So we bought it on market for 550 grand. So just with an agent, nothing fancy and exciting with this one really. We put a double-story extension on it, added a couple of bedrooms, a bathroom, and then just completely refurbed the whole place. As you can see, it looks a little bit different.
Yeah.
And we spent about £150,000 on this, the whole renovation, all of the works and everything all in. So we were kind of all in for, I think it was just over 700,000 in the end. We sold that just after COVID hit. Just shy of £1 million, which was a wicked profit, £275,000 after we paid everyone off. That was an interesting case study. There was nothing too complex, to be honest, on this one. It was just jumping in and having a vision when no one else did, I suppose.
Brilliant. So
sorry, just jump in. One thing to watch out on these is the tax situation. A lot of people will usually do this with their primary residence because there's no capital gains tax on it. But if it's not your primary residence, it can be quite taxing. It will hit you on the tax basically because of the capital gains and whatnot. You might have a capital gains allowance you can use per annum. Depending on what the profit is, it can hit you quite hard. Yeah,
I think the key with these things is kind of starting with your end in mind, getting some good advice, whether that's from people like us or an accountant or whatever that is. That can be really, really valuable and completely change your outcome, I suppose.
Yeah. So what sort of percentage of capital gains tax are you looking at? What kind of, is there a figure that you could kind of use as a benchmark, or is it?
Well, it's 19%, I think, at the moment,
19?
isn't it? 19. It's going to be going up though, and I think you get your tax allowances.
I think it goes up to 30. It depends on your basic rate, so it's variable. But there's lots of ways of avoiding it. So, like, we put this into a company. So the company owned the property and we owned the company. That meant we were only taxed on corporation tax, allowing us to kind of pull out that profit whenever we wanted. So, like I said, as long as a little bit of pre-planning, there's loads of ways around it. And like Dave said, the best way is if it's your primary residence, then there's no tax at all.
Brilliant.
Yeah.
Cool. And then on the just to clarify, perhaps for everyone, 8 months. Is that how long that took from getting the keys and getting in there, Andy, and then doing the refurbishment and then selling on the property?
I think it was a touch more than that. I think we lost a couple of months in COVID, to be honest. It literally, I think I was doing the final finishing painting and then COVID hit, and then I lost a month just because of that. So I think it definitely would have been 8 months. I think it might have been 9 all in, but it was under a year.
Cool.
Yeah.
Brilliant. Lovely. Thanks very much. That's great. So has anyone got any questions on buy to sell or flips? Anything coming up? You pop in the chat box if you want to. It's not a problem. And feel free to set in. So next question then, really, buy to let. I mean, I think that's pretty much. I'm going to buy something and let it out to which kind of show my age, really. It's like, well, I remember seeing when I was looking for my first flat, the papers had so many for sale signs, and then right at the back there's one page which said buy to let, and it's like everyone went, what's that? Like, no one understood what it was. And it's like now you flip, it's completely the opposite, isn't it, really? So you've got a massive buy-to-let market as opposed to actual and you obviously to sale. So I think I understand that bit, but what's this? BRRR. Who's going to explain that then? It sounds
Yeah,
like
well, I'll cover that. I mean, as we said, buy-to-let is probably the one thing people know the most, and I think the lettings market is really strong at the moment. It's so unaffordable for young people to get on the ladder that whenever we've had a property to rent, it just rents out so quickly. But yeah, basically BRR is a step further than a buy-to-let, because you could buy a brand new build and rent it out, and that would be a buy-to-let. But BRRR stands for buy, then you refurbish the flat or the property, adding value to it, and then once you've added the value, you refinance the property, pulling your money out.
Yeah.
Okay, and then you rent it out. Now, what that is really good for is really good for recycling your money. So you're using your money to buy the property, but then you're adding the value and you're pulling out most of your money, or if not all your money, on the refinance, and then you can put that money back into another property. So that allows you to kind of build up your portfolio, and it's a really good way of doing it. The other strength on this strategy is you get your kind of ongoing income. So basically, if you're trying to replace a job or something like that, or after you've done 2 or 3 of these, you quickly going to start replacing your own income. And also it pays you twice, because you've got the cash flow from the actual asset, from the monthly rent and things like that. But then also you've got the capital appreciation of the property as well. So, it's paying you twice all the way along. Yeah.
I think that the beauty of this strategy is the BRRR is the recycling part. I think that's how David and I both started. Didn't have loads of money around us. Every time we were buying, we were trying to buy such that when we refinance, that cash pot comes back to us and we can put that into the next property to kind of turbocharge the growth of our own investment portfolio, if you like. So it's kind of, if it doesn't make complete sense, the way it kind of works as an example is if you were to buy a house for £100,000, if you were then to refurb it and spend £50,000, the property in itself owes you £150,000. If you could convince a bank then that your property is now worth £200,000, they'll allow you to pull out 75% of that value. So you can then refinance it, pull out £150,000. You've then paid off yourself or your bank or whoever you've loaned to get that money in the first place, and you can go again with that money that you initially had. Does that kind of make sense?
Yeah, I think so. Yeah. Does that make sense, Will? Does that make sense?
Yeah, it does. I'm just the 150 that the 75% of the value, which is the 150,000 that you've pulled out, got to pay interest to the lending organisation that you've got from that.
But your rent will cover that.
The rent would cover that.
Yeah, it would cover, and then you'd have a profit from it as well. So typically, I'll bring you on to an example in a second. Okay. But yeah, you should, if you've analysed the deal right, you're going to have profit from that, and that allows you to pay the interest. But it's a good point about the interest, because with these things, they need to be set up correctly. What used to happen is you could, if you bought the property personally, you'd be able to write off that mortgage interest as a cost. Okay, so it's tax deductible. But in 2018, I think it is, they brought out the Section 24, which meant that you couldn't write off that mortgage interest. So what we do to get around that now is we don't buy them personally anymore. We put them through limited companies, which allows us to write off that interest. And it's a much more tax effective way of doing it. So just something to watch out for that as well. And the other thing to watch out, as you said, you have got that mortgage interest that's accumulating. So you want to make sure that property is rented out as much as you can, because any voids is going to eat into your profit. And also kind of any management costs as well. Some people will put it with an agent. We tend not to. We kind of manage it ourselves. But some people can pay 12, 15, 17% to a managing agent to manage the property for them. But in our opinion, the buy-to-let is probably the most hands-off thing you can do, because you literally give it to a tenant, they have it for 6 months or 12 months, and then you get the property back. And it's something that you can easily do while you have another job. So it's a very hands-off way of doing it.
Just on your point, Will, as well, like a typical, so on that example, a typical mortgage cost on £150,000 of debt would be roughly for £300 to £400 a month. So, and I don't know about where you guys live and stuff, but where I live, a £200,000 house might rent for £700 to £900 a month. So you're going to profit for £500 to £600 a month after your mortgage costs, if that kind of makes sense. It kind of gives you an idea of the kind of margins that you play with some of these.
Should we show? Yes. Should we just move on then to the example, if that's okay? That might be easy to see the figures. So there's some pictures of the actual work then that you guys have been doing. Yeah. So it's
so this was a 2-bed flat. It's a 2-bed flat. It's really good stock. It's really rentable. You rent it out all day long. Quite easy to refurb. Typically going to cost somewhere in the region of kind of £15,000 to refurb a flat like that. And then it's really quick, really easy. So we bought that one at auction, I think it was. It was a bit of a dive when we bought it, but with a new kitchen, new carpet, lick of paint, new bathroom. It's completely different looking property.
Brilliant. Is this that one in Hitchin that you were telling me about?
No, this is St. Neots.
My old stomping ground. Brilliant. Yeah. Okay, super. And then you've got the facts and figures, isn't it? Really? Is that based on this up in St. Neots?
Yeah, this is this one. So we bought this. We bought this at auction. It needed it had a short lease on it, so it needed a lease extension on it. But we bought it knowing that, obviously. Paid just under £82,000 with the lease extension and the refurb. That added another £40,000 on top. So it owed us about £122,000. But we got that valued at £165,000, which allowed us to only leave £17,200 left in the deal after the remortgage, and we pulled out all the rest of the cash. So that took us about 6 months. Now the net profit on the rent versus the mortgage is £550 a month. So when you work out at a return on investment on that £17,200, that returns us about 38% per annum. So it's it's quite a good return when you're considering the banks are giving you like 0.0001% on your money at the moment.
Yeah, if that. Whereabouts in St. Neots is just out of curiosity?
Right in the town centre. So it's a Grade 2 listed building. In one of the kind of I think it was an old converted hotel or something like that. Keys near the Market Square.
Right, got you. Brilliant, excellent. So so that's buy to let and BRRR. Great. Next question then. How about it? Yes, it's kind of service accommodation, so short stay and holiday lets. So I remember seeing your in your garage, David, you're advertising holiday lets in Norfolk. While you're in there trying to fix a car. It's like,
and we're fully booked till November. So
really?
It's just the market's gone crazy for it at the moment because of COVID. But service accommodation, typically you've heard of Airbnb, Booking.com, all that kind of stuff. So that's pretty much what service accommodation is. But also you tend to see kind of tradesmen using it as well. So if they've got a building project on somewhere in a city, they might use a kind of service accommodation in a city, so it's not just holidays and things like that. It's the beauty of this is you can take a normal house, a normal building, and instead of renting it out on a short tenancy agreement like a normal buy to let, you can do it on these short terms, and basically it just cash flows so much better, so your profit is so much better. So you're talking maybe 3-4 times as much profit than you would from a normal kind of buy to let. It's and if you pick the right location, somewhere that you like to go as well, obviously you can use the property yourself as well. So I know, Steve, you like skiing. So if you was get like a lovely property in Val d'Isere or something like that, you can rent it out all year round. And then, you know, if you want to go skiing there at the weekends. So it's a good strategy for that as well. Yeah. So the only downside I would say on this strategy is it can be time intensive. So a buy to let, you would just give it to a tenant and not hear from them much for 6 months. But with this, you've got guests checking in, checking out all the time. So you have to work for the money a little bit more. Different guests have different kind of expectations. You've got to manage your reviews, and that all can be a bit time intensive. But we use systems and automated databases to do a lot of that work for us. So we only just end up kind of dealing with the odd inquiry now and again.
I know one of my clients, he bought just before COVID, he bought a holiday let, a one-bedroom, small one-bedroom house. And because right at the beginning of COVID, and because he couldn't actually rent it out, he was getting £10,000. He's got £10,000, so he kind of bought it. He's got £10,000 for doing absolutely nothing. So you think, oh, that's I'm not sure how that's worked, but in fairness, it's right, because he couldn't really rent it out. So
I think there was a government grant. It's considered a business. So when they were giving out the grants, they were, you know, everyone who had a holiday let got the grant as well. So I
thought I'd seen you smiling even more so than normal, David. So let's have a look at some figures then, yes, or some examples. Have you got? So this is your examples here, isn't it? Really? Yeah.
So this is one of the ones in Norfolk. So these are the kind of before and after pictures. This was a shop and one-bed flat that we bought in Norfolk and converted it. Had planning permissions to turn it back into a house, so we converted it into a 3-bed house, added an ensuite, and just renovated, do a full renovation throughout. So it's quite a high-end renovation, and we made it a little bit quirkier than we would do then on some of the buy-to-lets we do, which are a little bit more kind of a little bit more subtle. But we kind of push this a little bit more.
Yeah, that looks really nice, hasn't it? I've had a question come in from Leslie, and it's: are you guys aware of under the doormat?
I've kind of heard of it. Is it like a kind of a social platform or something like that? Andy, have you heard of it?
No, that's beyond me.
Under the door. Perhaps where's Leslie? Leslie's asked a question.
I'm going to have a little Google now.
So Google. Ask someone. Leslie, are you there? Can you explain a little bit? Perhaps you could tell us about under the carpet. Hopefully you're there.
I think they're like the one that does where you can rent a house, like the Airbnb.
Oh yeah.
Yeah, but I think they're gonna a little bit more into, like, they can do houses, flats, and then they sort of even do bespoke things where they get the property to look like a hotel sort of thing. So they work with the client to turn their home into like a hotel kind of thing. They're quite distant. So I thought you guys probably would have heard about them in terms of the letting business.
I think they're kind of like luxury, aren't they? Kind of luxury short term.
Yeah, they do. But they said they have the luxury end and they have the like mid-tier kind of thing. So I thought, with the short accommodation thing, because they were seeing the same thing, that they were having a lot of business in that area of short lets.
I think that's it. You're trying to make your property more like a hotel, so the guest has to come and do absolutely nothing. And it's the same as Airbnb or Booking.com or Expedia. We kind of advertise all over those kind of platforms, and we got
because when you mentioned that, I remember them today.
So it's good to know. Always learning, always a student.
Brilliant.
Note of that.
Lovely. Thanks for that, Leslie. That's a great question. So let's go. I think we've got some examples, haven't we? Really, which is the numbers on this. So
this was a bit of a funny one, because this was bought in 2019, and I don't remember if you remember, but in 2019 there was a snap election, and everybody thought Corbyn was going to get in. And this auction was on the day of the snap election. So no one knew the results yet. And Corbyn was talking about kind of taxing landlords quite a lot. So basically no one turned out to this auction. So we got it well under what we wanted to pay. So we purchased it for 150,000, spent 53,000 on it, doing it up on quite a high level innovation there. So the property owed us just over 200,000. When we got it revalued, they revalued it at 300,000, which allowed us to pretty much pull out all of our original money. So we only had 4,250 left in the deal after we refinanced it. Now this kind of nets us a profit after all our kind of cleaning costs, mortgage interest, you know, all the bits that we provide, like little cans of beer and wine for the guests and things like that. Yeah, it nets us just over £2,000 per month profit. So if you work that out as an ROI on that £4,000 left on the deal, it's about 500, over 500% ROI.
Brilliant. Does that include all the furnishings then, Dave? Is that so? It's fully.
Yeah, so all the furnishings is in that 53,000. So yeah.
Oh, brilliant. So there's no like hidden. It's not just to doing that. Then it's this on top and that on top.
No. So there are companies as well. And what they'll do is they'll rent the furniture to you. So instead you kind of lease the furniture instead of buying it, so you can kind of save on the outlay. On there, we kind of at the moment we worked it out, and it works out more cost effective to buy it. But you know, we're always looking at that. So you know, as soon as it makes sense to kind of lease it, we'll probably go down that route as well. Because then it's kind of, it makes it a bit more tax efficient for you.
Got you. Brilliant. Lovely. Thanks for that. Super. So that's good. Now this next part really is like making your power team really. So I think it's kind of the things that you're looking at. Well, I quite like the idea of this, but who's going to help me really, or who do I need to talk to? I know you guys are coming up with these fellas really, aren't they, all girls and boys? That explain. Yeah, could you explain a little bit more about this sort of power team, please?
Yeah. So these are the classics you see a lot. So all of these guys are really, really important. Mortgage broker, tax accountant, solicitor, builder, architects. We use and talk to these guys probably on a daily basis nowadays. Maybe that's a bit sad, but a lot. I think they're super important on these deals because we're always dealing with big numbers in property. It doesn't matter what part of the country you are, we're in the thousands of pounds, and small technicalities can make a big difference to your end game. So for us, these people kind of on the screen you see are so important. We're forever pinging little questions on deals we're analysing, looking at sending a message to our mortgage broker going, is this going to affect the mortgageability of this property? We had one a couple of weeks ago where it was in a serious flood risk zone, and we had to ping across a message to him going, is that going to affect our exit? Is that going to affect, are the mortgage companies going to have a problem with that? And being able to get a response straight away going, no, that's fine, here's the lenders you've got the choice of, straight away is so valuable. I think with all these things you can find a really cheap knockoff online alternative. Some people don't even use a mortgage broker sometimes, which to me is crazy, but there's always ways of paying less money on these things. But I think the importance, especially once you start doing this more and more, is having a relationship with these people. And if you've got to pay a bit more money for that, it's worth it 100-fold in the long term.
So they're the sort of guys that are going to their fees are going to get come back to you for sort of 4-fold or 5-fold or however many times.
100%. I mean, like for example, we had recently a planning consultant who we've dealt with a few, and most planning consultants was, we're trying to do something and add a house onto a site, and all the other planning consultants were saying, no, it's not possible. And probably one of the most expensive ones said, do you know what? Yeah, I think we could probably get a house on here. So, we gave it to him. He was expensive, but, he got the application in, he got it through. And, now we've got a new build house next to another build house. And there's kind of, hundreds of £1,000s profit there. And, his bill was kind of £2,500–3,000. So it's well worth that. He's made his money in gold, you know.
Got you. So
I think the one that sticks out as a bit different to the others there is the builder. I'm sure we've all had horror stories or heard of horror stories of problems with builders, and I think this is the hardest one of the lot of them, and probably the one that, sadly enough, will change a lot throughout your journey. Definitely has for us. We rarely stick to one builder for too long a period of time because they seem to have a shelf life. I think this is the one that has the hardest, most amount of due diligence. Obviously, you're parting with a lot more money with these guys, whereas the brokers and the accountants and stuff, you're only paying them once they've done the work. So the builders can be a lot more difficult, but there's all sorts of tricks of the trade and kind of little techniques that we use to try and limit risk on these and to make sure the builder knows what they're on about and we're going to get the work done that we need. But there's all sorts of ways you can find these guys. There's some great websites coming out nowadays like mybuilder.com and Rated People that can be really, really helpful. But yeah.
And the other thing is we have kind of we have specs that we do, so really detailed specs, and we have kind of templates for that. So, you know, when we're going out either to tender or a builder we already have, we'll make sure that everything's on that spec. So, you know, and once they priced it and kind of signed it, if there's any kind of disagreements later on, you know that you've kind of provided them that spec. They don't have a leg to stand on. So, you know, it's all about kind of process as well, and just making sure you've dotted all the I's and crossed all the T's.
I think that's it. I think it's kind of quite a labour-intensive process getting the building work started, and often you just want to get it started. And I've definitely done this before, where I've started off with a very vague kind of handshake conversation. It's like, oh, can we just do this here and then that there, and then we'll finish off this. We'll sort out those bits at the end, and they always come into problems. And we have a pretty strict process now of kind of we have a multiple page spec drawn up with multiple kind of plans and all sorts of stuff that they have to sign. And we make them kind of price up each part individually. So if there are problems, we have an easy time kind of running back to, well, what expense is that thrown up? So lots of things like that really help that process.
Sure. Yeah, you can see that working really well. That makes it, otherwise it's just I thought this was included, or I thought that was coming, and there's going to be problems. And it's like, well, surely you'll be able to sort that out for us. And it's always that's going to eat into your profit big time, isn't it, really? Whereas if it's in writing and it's written down and everyone's aware of it, well, it makes it a lot easier to resolve any issues.
But that's the important thing to remember. It is a process. So, you know, there's these guys who make a living out of kind of just delivering these processes, but it is just a process. And once you know the process, you can implement it. It's quite easy.
Yeah, so it's a leverageable thing that you're going to be doing again and again and again.
100%. Yeah.
Yeah, got you. Okay, super. Any questions on that? Or should we moving on? Once you've built your power team, I know. I'll just move on. So I've got, well, I suppose it sounds good. So where do we find these deals then? Really, that's where do we find the deals? Is that there's
I'll cover that. So you know, it's there's a number of ways that you can do this. You know, a lot of people will tell you about building relationships with agents, and that is definitely true. But the problem is there's so many people trying to do it, and I think the one thing to remember about agents, have we got any estate agents in this group at all? I'm not sure of that. Okay, all right. I'll risk it being slightly derogatory, but you know, they're obviously interested in themselves, and they're interested in making as much money they can, as we all are, and they can be a bit greedy at times, but they want an easy life as well. So if you can get in with an agent, and we know a few agents in the areas that we work with now, and they know that we'll buy a property at the price we said, we'll pay for it, and we'll act quickly, then if they want an easy life and they've got a deal that's slightly harder than other people, then then yeah, basically they'll come to us because they know they'll have an easy life on that side. So yeah, that works, but it does take a bit of time to kind of build up that relationship. And as I said, there'll be a load of investors trying to do the same thing and kind of knocking on doors and saying, well, do you have any cheap properties, any kind of below market value properties? And they just say, oh, we'll put you on our list, and then you never hear from them again. So it takes time to build those relationships. But we use a lot of kind of the right moves, Zoopla, EG Property Link, which is a kind of commercial website, because we do quite a few commercial conversions. Now, the strength of these websites is you can kind of set up alerts, and you can make it really specific. You can even kind of draw on a map where the sector is that you're looking in, and be really specific on those alerts. So as soon as a property comes onto the market that you're looking for, and you might have stipulated a 3-bed property, and you can even put a word like renovation in the alert. So if an agent types in need of renovation, then that one will kind of pop up on your screen first. So yeah, you can automate these systems really easily, which makes kind of trawling through them a lot easier, and means that you kind of get you're the first to pick up the phone as soon as a property you want hits the market. Another popular one is direct to vendor, which is typically what people will do is they'll do a lot of flyering. So it's a very labor intensive way to get leads. But the strength of this is you're getting them before they get to the agents. So sometimes you can get a very good deal from this, because people have all sorts of reasons for wanting to sell their property. And if you can get in front of them first and kind of provide a way for you to sort their problem out, then you can get a really good deal.
Sorry, Dave, just to clarify on that, then so that would involve in pulling up in an area and just sort of scouring at houses and thinking, oh, okay, this one looks like it could be there's some potential here. I think everyone knows sort of houses in their streets or locations where you think, you could certainly turn, this is a good location, but it's a bit run down and needs work.
Exactly, it's literally a numbers game. You just post flyers or knock on doors, and it's just purely a numbers game. And people who are really good at this will work out their conversion ratios and know if they send out 10,000 flyers that they'll get, I don't know, 100 leads, and from those 100 leads they might get 5 properties. So they break it down on that, and then they know if they want to go out and get 10 properties, they know exactly how many flyers they need to send out. So it's a really good way of doing it. You get some really good price property, but it's very labor intensive, and we don't tend to do it. Some companies have also gone on kind of social media and pay-per-click Google AdWords and things like that to try and pick up those leads, but it's a very saturated market. And obviously the last one is auctions, really. That's typically a good place to go. Now they're all going online as well because of COVID, so it's ever so easy. So you don't, like, now you can go to multiple auctions on the same day all over the different kind of places in the country, because it's all online. And that's a really good way to do it. We picked up a few deals from auctions, and got some good deals. We've also, what we've done is offered on them prior to auction and tried to get them concluded before the actual auction, and we've had some success on that as well. So yeah, it's auctions are a little bit difficult at the moment, but again, if you follow a process and you know what you're looking for, then you can have success.
Got you. I think the key with this side of property is a lot of people really overcomplicate this, and you get a lot of courses trying to sell you, teaching you a bunch of these different ways. But for David and I, 90% of our deals come through just trawling through Rightmove and Zoopla and Property Link and those websites, and it's nothing exciting or special, really. It just becomes a game of how efficient can we look at these properties, how quickly can we decipher if there's value in wasting our time on them. And it kind of ties into what we're going to speak about next, but it's the more you kind of do this, the more you're looking at properties, the more you're setting up these alerts, like David said, that really makes this process a lot quicker, and it means you can be analysing 30 properties a day
Yeah.
That makes sense.
It's also knowing your area as well. If you know that area really, really well, then you can spot that property that is, the one to go for, and you can spot it really quickly because you're an expert in that area.
Yeah.
So that's the other thing I would say: just become an expert in the area you want to deal with.
Brilliant. I've got a question from Leslie. What about the council with disused properties? Is there any sort of mileage in that?
Yeah. Go on.
No, after you gone.
It's one we've done as well already. We've bought some properties in Letchworth off the council. It's another great strategy. It's a bit more complex because you kind of get one shot with these people. If you mess them about, your name is on a blacklist somewhere, I'm sure. But some brilliant deals can come from that. Some of the best deals we've done or are doing at the minute are definitely from working with councils. I think that becomes just all about aligning incentive, whether that's trying to provide some social housing for them or whether that's just trying to get a deal done for them.
Exactly. Housing associations is a good one as well. You know, sometimes they're looking to offload old properties that are just too expensive for them to renovate. So that's a good one also. Brilliant.
Okay, super. Lovely. Thanks for that. Hopefully that answers your question, Leslie. Let's just moving on then to the next area then is analysing deals, really. So you said, oh yeah, you can start looking at properties and really analyse those quickly, and hopefully these are some clues then of how you can actually do that. So I'm not sure whether who's going to answer this one. Take this one.
Yeah, I'll take it. It's this is probably one of the most important parts of what we do. Is just kind of the due diligence process, if you like, over the deals you're looking at. So your spreadsheet's your best friend. I spend way too much of my life on Excel. It's sad. But it's so important that this process is done properly because this can make or break your deal, obviously. You need to finding your end values, your comparison, your historical data are all like the most important parts of this. Obviously, if you get your end value out slightly, that's going to really affect your end game. It's going to really affect your sale or your refinance on the BRRR strategy. This is done loads of ways, but it's a lot simpler than it might seem. It's just a case of so taking the first example of the flip, I bought a 3-bed house. How much is it going to cost me to do my extension? It's going to cost me this much. How much is it going to cost me to sell the property? It's going to cost me this much. What is the end value of a 5-bed house in that area done up perfect standard? It's as simple as that, and it's inputting all those numbers and making sure the kind of return on investment or the profit figure that you're coming out with is meets your threshold or meets what your expectations are. There's a bunch of different little platforms that you can use for this. Nimbus is a great one. It's free. You can kind of put a search area around things, put a criteria in, 2-bed house sold this year, etc. like that, and can come up with some great comparables for you. But yeah, can't stress how important this part is, and also feed into what David was talking about with the quicker you can analyze deals and count them in and count them out as potentials, the more deals you can get through and the more deals you'll get, if that makes sense.
And it's for us, it's kind of, we might see a property and we think, oh, that's definitely a bit us, and really excited about it. And then we run the numbers on it. Within 10 minutes, we realize it doesn't work. It's a deal. And it's just saved us all that time of going to drive up to the property, look at it, do the viewing. So I would say, because our due diligence, we know when we're going to see that property, we're ready to offer on it, as long as there's no shock horror kind of things that we're not expecting. So typically we will offer on probably 50% of the stuff we view on, and then it just comes down to negotiation from there.
Got you. So it's doing a lot. It's that work up front really is going to save you a lot of time at the back end of it. Then and
the other thing is you can get some really lazy agents as well who put really no information on the listing if possible, and sometimes you can get a really good deal there, because if you can, all that information is available on the internet somewhere, either through Rightmove or kind of the EPC database or things like that. So if you can correlate all that information, you've got more information than the other person sitting in front of the computer. So it kind of gives you a bit more bit more leverage to do a deal and things like that, and know if there's money in that property or not.
We had a great example of this actually with one we're doing up at the minute. David found a property. It looked a little bit overpriced initially, in the one in Huntingdon, and he drills down on it and he's looking at it, and then on the listing, the agents listed it as 44 square meters, which is about the size of a one-bed flat. So we're looking at it and going, well, by the time you've kind of refurbed it, there's not really that much money left in it. But then David jumps on the EPC register that you can see there to see, is it exactly 44 square meters or is it a bit bigger? Turns out it was 92 square meters. It was about 45 square meters a floor, which meant suddenly we were analysing a deal with 2 flats, and that deal went from kind of a touch and go deal to an absolute no-brainer, and we offered on it and bought it straight away. So yeah, it's a great example of that.
Yeah. Oh, lovely. Thanks, Andy. That's a really good example. So that Nimbus, that's a tool then that you can put the data in, and it's tracks the sort of progress, if you like.
It does loads of things. Oh, God, you use it more, mate.
It does. It's kind of like a big map, and you kind of type in a postcode, and you can search the different property, and you can kind of click on that property, and it'll pull up data from loads of different areas, like the kind of EPC database and planning history, and just correlates it all into one place for you. It has levels, so there's a kind of free version and it's premium. But it's, for a free system, it's brilliant. So you can get so much information on that.
Got you. Super. Brilliant. Lovely. Thanks for that. Oh, I think we're coming towards the end, aren't we now? So let's just move on to the next bit. I mean, I suppose this is a crystal ball time, really, isn't it? Market outlook. What's Mystic Dave and Mystic Andy got in their in their sort of tea leaves or whatever you're looking at, that what you can share with us?
I think what one of the biggest trends we're seeing is the town centres. So typically retail is on the way out, and the councils are looking to repurpose that, and the government has really kind of forced their hands on it, and they've made it really relaxed planning laws for us developers to come in and turn shops into residential without planning permission. So it's a bit of a shock when we heard this was coming out, but the government's gone full force on it, and they're really trying to repurpose some of these shops which are disused. So there's a massive opportunity for people to get in there, and if they know the kind of the permitted development and prior approval rights, you can go in there, and for a small fee you can turn it into residential. So that's a massive trend we're seeing. Also, obviously, I think everyone who's ever bought something recently, from a kind of TV or to a sofa or anything like that, it's they'll see inflation, they'll see prices going up, and what we're doing at the moment is we're looking ahead slightly and seeing that interest rates might go up slightly. So all our deals we're looking at the moment, we're kind of pricing in a bit of a rate hike to make sure that those properties are cash flowing right, and there is going to be profit if the interest rates come up a little bit. But that being said, there are some people who are talking about a big housing crash because of interest rates going up slightly. But in my opinion, I just don't think there will be. There's such a housing shortage in the UK. I mean, for example, Boris Johnson, he's targeted in 2019 to build 300,000 houses per year to meet up with demand until mid-2025. In 2019, they built 225,000, so they were 75,000 behind on their first year. Last year, because of COVID, they built 121,000. So that puts them, what's that, 80 plus 17, so that's 155,000 behind their target in 2 years. So they're predicting that they'll actually be a decade behind on their estimates to kind of deliver all these housing. So there's such a shortage, and supply and demand just means that prices are just going to keep going up and up and up. So I really can't see there being a there might be a small correction when interest rates come up, but the trend will still be upwards because of the rules of supply and demand in our, you know, in my opinion. The last trends we're probably seeing is kind of rural and cities. We've, you know, recently we kind of invest in both, and we're seeing the rural properties absolutely go skyrocketing up in price. You know, everyone's moving out from the cities to the rural areas. So, you know, if you can get some good property in the rural areas, they will sell and rent all day long. But on the flip side of that, I think there's some really good deals in some of the town centres and some of the cities. Yeah, I know Andy's just picked one up recently where, you know, I was quite shocked at how much he paid for something in London. And yeah, it seemed brilliant value for money. And I think it's only a matter of time until the city's open again, and then these prices are going to start shooting up pretty strongly, in my opinion.
Got you. Brilliant. No, it's a great little snapshot there. I know you can't, nothing's certain in that, but I suppose I was talking to William this morning, and it's like, well, only in my lifetime has property gone down really in any sort of great length of, and that was only for a few years. Whereas I'm, in my 60th decade, soon to be anyway, and you think, well, property's only going one way really, isn't it? So I think that's the case. Let me just check this chat. Certain cities, working. Yeah, I mean, I think you're right, Leslie. Leslie's saying there, this trend is for cities to rural areas caused by working from home, really. And I know I had this chat with Mark, and he mentioned that a lot of people are coming out of London, so you can realise, well, actually, I can work from home in a nice suburban house with a garden, rather than being in a one-bed flat or whatever in the city, really. So it's certainly helps. It's depending on what you want, really. So that's very interesting point, really, as the marketplace changes. Okay, so I know we're rushed. We're going over time a slightly bit, but what I'd like to just sort of wrap up, really. We've got a sort of action plan. Then, really, is the next sort of stages would be, okay, well, we're happy to offer a free consultation, really, and that would involve really working out, well, what areas are you most interested in, and that would be what strategies are you looking at, what are your short-term or long-term goals. You know, how risk averse are you or not, as the case may be? What kind of timescales are you looking at? Are you looking to move now or in a couple of months or whenever? Your financial position, that will obviously be very confidential. Have are you cash rich, or are you looking to borrow money from banks or other sources? And then the other one really would be the level of commitment. Really, are you looking to be more hands-on, or is it going to be an investment opportunity where we pass over to experts to actually get that money back from you, really? So they're the kind of things, the questions that we're going to be looking at answering, really. And that's on this free, so no obligation consultation. What we're looking to do is just get things moving. The next stage is the level of interest, and then we can start moving on that from there, really. So I hope that makes sense. Are there any other questions while we before we come to a close? Any other questions from anyone that have got burning questions? Anything? That's all. No. Gary, good. Will, anything? Will, Mark, anything?
No, I was noting various questions down along the way, and then gradually you answered them all.
Oh, good. Brilliant.
Do something right then.
That's impressive. Yeah, that's good to know. I've got one. One in the chat. Let's have a look. Yeah, definitely going. Oh, right, brilliant. Leslie, definitely going for the free consultation. Superb, lovely. Thank you very much for that. What we will be doing is I'm going to.
Steve.
Sorry, Ricky. Yeah, far away.
Yeah, sorry. I have a question here concerning the BRR. So I wanted to know whether the BRR, is very good for, low valued properties, because from your submission, I was thinking that the BRR is very good for, low value, submissions. Is that right?
Well, I think it all depends. Again, it comes down to analysing the deal. So you've got to make sure that the rent will cover the mortgage interest. So typically what you see in kind of places like London city centres and things like that is you'll see a very low yield, so it's very hard to get the mortgage interest to kind of the rent to cover the mortgage interest. So it comes down to analysing it. Look at the areas you want to invest in. You know, for Hitchin, for example, we've got some properties there, and they do really well. I wouldn't say particularly they're low value properties, but you know they turn a profit. But typically speaking, you'll get more of a profit in lower value areas, I would say. Andy, would you add anything to that?
Yeah, I think the principle kind of applies to everything property related, really. If we've taken it from kind of what we've shown you there to scaling that up a lot more. So now we're looking at, we buy commercial premises, then convert it to a block of flats. So we might end up with, one of the deals we're doing at the minute, we end up with 5 flats in Hertfordshire. That is a BRRR because technically, once we refinance it, we'll have no money left into it. We'll have all of those flats for free, and they'll rent for probably 50 to 60,000 pounds a year. So you kind of, it works really simply at low value, and I think it's a bit more obvious at that level. Definitely, I think that's right. But I think it can be applied across lots of different size scale developments as well. It definitely gets harder with higher value properties though.
Yeah, thank you.
Got you. Brilliant. Lovely. Thanks, Ricky. Great question.
I have a
Any
question.
other? Sorry.
Yeah, I have a question. I have a question. If you have a property that you just recently acquired, and then you wanted to lease it for a couple of years to move to another property, I mean, how would that best? Would it be best to go with the council or with an estate agent? How would that work if that's feasible?
So you renting the property, or have you bought the property?
We're about to buy the property.
Yeah.
And it looks like we'll be able to move within a few months.
Yeah.
So we're looking at, okay, what do we do with the property once we acquired it? And then within a 6-month period, we're looking at moving again.
Yeah.
We're thinking, do we lease it out, or do we privately rent it, or do we just, if we were looking at maybe a leasing option?
Yeah, so I mean, with these kind of council leases and things like that, they're ultra secure. So you can lease it out on a kind of fixed period of time. Like sometimes it can be up to 5 years. And the beauty of it is you're leasing it to a big company, and they have to return it to you in the same state. So if anything breaks in that time period, and that's really good. But they do play a smaller rate. So so they'll typically play these rates that you can find on the internet. I'll try and remember the
NHA rates.
Yeah, that's it, NHA rates. So if you just Google NHA rates, you can do a search on it and with the postcode, and they'll typically pay that. You'll get more letting it privately most of the time. Again, I can't talk for every area, but typically speaking, you'll get more. But obviously that's a little bit more work. And it's you'll be in charge of maintaining that property, providing that the tenant doesn't break something.
All right. Okay. Yep. That's thank you.
Brilliant. Okay, super. So I'm anxious of the time, really. So any questions? If there are any more questions, what we're going to be doing is I'll make the recording available, and I'll make sure you get an email to the link to the recording. Along with the slides. So I'm quite happy. I think it's okay with you guys to share the slide. We can share the slides and the information there that is in there. So I'll share the slides. Maybe tomorrow morning now, but I'll share the slides, and we'll do the video, and make sure you've got a link to the video. Any questions that come in, the details will be on say the slide there is my details. Then you've got Andy and Dave's details there. So the details are all on the slides. If you need to get in touch with us, you can go any one of us, and we'll refer to the others as a part of the team. So I'd like to thank you very much for your participation. Thanks very much that you've ticked that box. Some great learnings there. I think I've learned a hell of a lot, really. So it's fantastic learnings from Dave and Andy. And I hope to see you guys doing some property investment with these two. So thanks very much, and have a good evening. I think that's it for now. So yeah, thank you. Brilliant, lovely. Thanks, Leslie. Some great comments there. Thank you. It's been brilliant. That's great. Lovely to hear. Super. Thanks very much. Bye for now, everyone.
Cheers.
Yeah,
Bye. Press end, Will. Bottom right. Oh, he's gone. Cool.
All right, mate.
Yeah, no, it went well. Yeah, went very slick, I think. Yeah, very good.
Good. Yeah, no, it's nice to get a few questions and stuff like that. And like, it's
Yeah.
I quite enjoyed it really. So yeah.
Yeah, that's always good, isn't it, really? Because it's really easy. Oh, hang on, let me stop the recording.